Today we're going to be taking buy-sell signals from Heikin Ashi candles, so without further ado, let's get straight to it. Hey traders, I hope you're going extremely well. My name's David and welcome back to my channel where I go through profitable trading strategies. Today we're going to be looking at Heikin Ashi candles and we're going to be trying to build a profitable trading strategy using TradingView and backtesting as far as we possibly can. Now before I get a load of hate in the comments, I do realise that backtesting on Heikin Ashi candles is not possible inside of TradingView. We're going to be using an indicator that will emulate Heikin Ashi candles to give us our best entry. But of course all of our entries will be made after the close on the following open on standard candles. Now if this doesn't make much sense to you, don't worry, I will explain everything on the charts in a couple of seconds. So I guess the best thing to do as always is get over to my screen, explain how Heikin Ashi candles work, put together a trading strategy and backtest it using TradingView. If that sounds something that's interesting to you, why not subscribe? I do videos every Monday, Wednesday and Friday here on YouTube about profitable trading strategies, and while you're there, if you don't mind giving the video a good old like, it really helps to grow our community. You'll also find links down in the description to my spreadsheets where you'll be able to see all of the trading strategies that we've backtested with the elite backtesters, access to the David Tech strategies, bots, and also a 1 million bonk coin giveaway to 100 people if you comment down below, and there's also a gleam for even more people. So you can find all of that in the description. Lots of stuff going on down there. Right, let's get over to my computer. Let's talk about this trading strategy. Okay, here we are on TradingView. As you can see on my screen, I'm currently on the standard candles of TradingView on Ethereum. I'm going to be backtesting on Ethereum today to celebrate the ETF that we managed to get last week. We're going to be on the 30 minutes, but let's first of all talk about Heikin Ashi candles. As you can see, we have our standard candles here. A standard candle is just an indication of where price opens, closes, and its high and its low. All they are really is just indications of the highest points and the closer of the candles before it moves on to the next candle. Very, very important, but price moves up and down inside that candle throughout the whole of that time. So 30 minutes on this candle here. Heikin Ashi candles, on the other hand, are an algorithm. They're mathematically put together so that they can predict or try to give a better understanding of the market. Now they seem very, very good and a lot of traders swear by them. I haven't traded them personally very much as I am an algo trader and they're a bit complicated to trade on algorithms. So if you go up to the top here, you can see you're on standard candles. You can either have the line chart or you can click this one here, which gives us Heikin Ashi candles. Now Heikin Ashi candles try to flatten out the market a little bit more so that we can understand the way the market is trending. As you can see here, we can see that they're all green trending up and red when market is trending down. So Heikin Ashi candles kind of actually try to represent the trend, unlike normal candles which have just a high, low, open, close. So as you can see, I have written down the formula of a Heikin Ashi candle here on my screen. So the open price is the average of the previous open and close of the previous candle. The close is the open, high, low, close price divided by 4 on average, obviously. The high price is the highest of the candle, very much like normal standard candles. And the low is the lowest of the candle, exactly the same as normal candles. So I've drawn a diagram here. I know you guys love how much I draw when I draw. As you can see here, this would be a standard candle. We have the high at the top here, the close just here, the open, which would be lower than the close, obviously, if it's a bullish, and the other way around if it's a red candle. Then we have the low of the candle here. In Heikin Ashi, we actually have high and low. They are exactly the same, but our close is actually the open, high, low, close divided by 4. And the open is actually the previous candles. So as you can see here, it's the one before, open plus the previous candle's close divided by 2. But this is where we come into a problem when we're actually trading or backtesting Heikin Ashi candles. The actual entry that you'll get will be either on the open or the close of a candle. And when you're backtesting, the open and the close can actually be quite far away from your actual entry. So on a normal candle, when you have a trading strategy, generally you'll get in on the open of the following candle after your trading strategy actually activates, meaning you'll get in at this candle here. But because the way that Heikin Ashi actually works, you're probably going to get in at the open close divided by 2, where your open could actually be much further down or much higher up, completely falsifying falsifying the results of your actual trading strategy. So the best way to actually trade this is to use an overlay on your chart so that TradingView actually records the actual real entry that you would have got. So I'm going to go back to standard candles here. And we're going to go look for indicators up the top here and look for Heikin Ashi candle overlay, which is this one here that has 1,655 downloads. Now we're going to add it to the charts and it's going to look something like this. Now as you can see here, we have actual overlays of actually the candles. And to explain what I was saying earlier, if you had an activated trading strategy that got you activated here, your entry would probably be on the next candle just here. But if you're using Heikin Ashi candles, the entry open will be here. TradingView will actually record that as a trade all the way down here. But price may never ever come down to here. And even if it did, it would be completely different algorithm before it goes all the way up back here. So your best bet for actually backtesting and actually trading Heikin Ashi candles is to use an overlay on your chart. You don't have to actually use it. You can hide the open closes here and just leave a line just like this. But this will give you a much more accurate result and you won't falsify your trading strategy. Right, now we've got that out of the way, let's have a look at the rules of this trading strategy that I've found, and hopefully it'll be extremely profitable because you've been very patient up until now. Okay, for the trading strategy, we're going to be using the HA overlay as our entry signals. We're going to be adding the T3 just like this by David Tech. Now, if you're looking for the David Tech indicators, you can go over to the David Tech website, click free indicators here, and there's a huge list of all of my free indicators. The T3 is the one here. Just go here and click on the favorites button here. They're all free and open source. If you want to trade with bots and my strategies, the links are down in the description below. We're going to click that, add it to our favorites. That way you can find it here on TradingView, just like I have here. We're going to add that to our charts. Now this is going to give us our trend direction. The T3, we're going to click on the cog here and we're going to set it to 8. This is going to give us our trend direction, our baseline as we call it in David Tech. When the T3 is green, we're looking to take longs. When it's red, we're looking to take shorts. As you can see, we have the green Heikin Ashi candles in the background. If I hide the candles, you can see that they're all green. So we would get an absolute brilliant confirmed entry here without falsifying our results. So we have our baseline indicator, which is going to give us our trend direction. When price is above it, we're looking for longs. When price is below it, we're going to be looking for shorts. That's our T3. We have our confirmation indicator, which is going to be the Heikin Ashi candle overlay. We're going to add another couple of indicators just for the confirmation and the volume and volatility indicators. Okay, for our volume indicator, we're going to be using the TDFI, which is the Trade Direction Force Index just here by David Tech. We're going to add that to our chart. Now it's very, very simple. This indicator gives us confirmation for volume. So when price, it goes over the green section here, we're actually going to be looking for longs. And it's just going to confirm our longs. When we're looking for a short, we're going to confirm our shorts when the TDFI is in the red zone here. Our final indicator that we're going to be adding is the ADX. The ADX and MA by David Tech just here. Now this is going to give us our volatility index here. We're just looking for the red line, which is the ADX, to be above the moving average, which is this blue line here. As you can see just here, we would have an absolutely perfect entry. We have our T3 in green and price is above it. We have the Heikin Ashi candles in green as well. The TDFI is in green, so that's confirming volume. We have our volatility indicator in red over blue, which means that we have confirmed our entry. Okay, so our entry is just here. Now, if we were using the entry of the Heikin Ashi candles, like I was saying earlier, you would have got in just here. But that's completely false. We're actually going to get in, unfortunately, just here, giving us a slightly less good entry. So that is why we can't use Heikin Ashi candles for backtesting, because it will give us fake results. As you can see, price will never ever come back to here. Right, okay, so that's our entry. Let's add a stop loss and take profit indicator. We're going to use the ATR today. The ATR bands by David Tech just here. We're going to go to the ATR bands, the cog button here, and we're actually going to be using a 3 upper bands and lower bands multiplier today. That's going to give us a little bit more wiggle room, which is great. We're going to set our stop loss to the ATR bands just like this, and we're going to be looking for a risk to reward of 1.1. Now, I always prefer to do 1.1 than 1. It helps us to cover for fees and gives us an extra little bit extra edge. So if possible, I always do it 1 above 1. Okay, there was our first entry and our first take profit. As you can see, we would have won that trade and we would have taken 1.96% out of the market. Absolutely perfect, and we'll be able to correctly backtest this trading strategy. Okay guys, that is today's trading strategy. I'm going to go away and code it so that we can backtest it all the way back to 2020. Okay, let's go.
Come on, David, and once again he's going to code a new strategy. He'll be back in just 5 minutes. Come on, David, show us what you got.
Guys, before I go over to the backtesting results, I've got a huge announcement from Bybit, who are kindly doing a huge giveaway for our 300,000 subscribers here on David Tech. It's an exclusive 100k guaranteed giveaway. They're guaranteeing to give away 100k funded accounts, 50k, 100k to be won. There's Formula 1 tickets, BTC, Ethereum, loads of airdrops, and not only that, we're also doing a Gleam giveaway, which you'll be able to find in the description as well. And we're going to be making 100 Bonkcoin millionaires. You'll be able to find everything down in the description. A huge thank you to Bybit for everything they do to the community. You guys rock. Thank you very much. Right, over to the backtesting results on TradingView. Right, here we are on TradingView. Let's go through the backtesting results. I've called this one Heikin Ashi T3 by David Tech. Drum roll, please. Boom! Right, as you can see, we've got the small amount of data here. I'm going to deep backtest as well. We're going to be deep backtesting all the way back to 2020. As you can see, we would have had a net profit of 1,317%. 513 closed trades, which is absolutely awesome. A win rate of 58.48%. A profit factor of 1.547. A max drawdown, which is a little bit higher, of 22%. But we are using crypto here, guys. We're using 15x leverage crypto. You can actually decrease that max drawdown, but you will also, of course, decrease your net profit. Let's have a look at the buy and hold. If we would have purchased Ethereum back here, you'd be up 659%, as currently on this trading strategy, it'd be 1,317%. Let's have a look at the data without the deep backtesting. It looks pretty good as well. We're currently on a 63% win rate. If I go over here, you can see our max wins in a row were 8, our max losses in a row were 5, and that would have been on 187 trades. Now, one last thing that I'd like to show you guys is the backtesting results. If you would have been using Heikin Ashi candles, they will be a lot better, but you won't be able to trade them because the alert will go off at the wrong time and all of those terrible things, and you'll get absolutely wrecked. So let's just remember we've got net profit of 313% here. If I go over to Heikin Ashi, we had 759%. Now, the lucky thing is that it would have stayed maybe profitable if it was on the actual candles, as most times these graphs look absolutely awful, and then putting them on Heikin Ashi makes them look absolutely wonderful. So if you're algo trading or trading in general, I suggest you use the overlays. That way you can see where you got your entry, either using a line chart or standard candles. Now, this actual trading strategy was inspired by this one I did a long time ago and optimized by one of our community members. It's actually been running for about 75 days on our site, all the way back to March here. And as you can see, it's absolutely killing it. This is the equity curve on live trades at the moment. In 90 days, it would have made 62%, which is absolutely brilliant. And as you can see, this here is the backtesting results. We would have been 700% up, and currently with the today's date, we would have been 1000% up, which is absolutely incredible, including compounding obviously effects. Okay, we're going to be giving 1 million Bonkcoin away to a random comment from this video here. It's about a spreadsheet that you can also find down in the description. I really do suggest you go and have a look at that. Let's get those comments. There's 40 comments, which is amazing, guys. Let's press start and give away 1 million Bonkcoin. This crypto, congratulations to you. Congratulations to you. You've just won 1 million Bonkcoin. Please reach out to me, Vlad or William, in the Discord, and we'll send you over 1 million Bonk. Right, okay, guys, thank you very much for joining me. A bit of a longer video today. And without further ado, I'm going to wish you a wonderful week. Don't forget, I'm going to be live streaming tomorrow. We have another video on Wednesday and another one on Friday about profitable trading strategies. Take care, keep safe, trade like a boss, and I'll see you on Wednesday. Bye-bye. Boom.
Come on, David. Once again, he's gone to code a new strategy. He'll be back in just 5 minutes. RSI and MACD.